What's up, everybody? Brad here with the Money Dad channel. In this video we are talking about Apple, the one and only, the biggest stock in the stock market. There's a pattern shaping up here on this stock chart that is looking like it's going to break for some pretty serious gains to the upside. I want to show you the pattern, the price target, the potential, all that in this video. I'm going to talk about some of the other patterns that we had in the past on this chart. I'm going to talk about the financials. I'm going to get into all of it because this is the bread and butter of the stock market. I mean, this is the dog, right? The top dog in the stock market. This is the biggest company in the American stock market. If you don't know what Apple is, I mean, I can pull up the website, but I can't imagine there's anybody out there watching this video that doesn't know what Apple already is. I mean, they make the phone that's in your pocket. They make the computer that is on your desk. They make the iPad that, you know, your kids are playing with. They make the watch that you're wearing. They got the music that you're, you know, streaming out of iTunes. They got everything. Everything. They have insane profits, fundamentals, all of that. You know, I won't get too far into that. We're gonna get into the chart pattern here, but real quick we'll go over the revenue and the profit because it's just bonkers. If you guys are investing from a fundamental or financial kind of long-term hold on this company, look, you've heard it probably 1,000 times before if you're a long-term holder on this company, Apple. It's just, this is a great company to hold long-term. This video is going to be more about a short to medium-term chart pattern that's shaping up that looks like it's going to break to the upside for some nice quick gains. But real quick on the financials, I mean, look at what TradingView has right here. Let me pull it up a little bit bigger on the screen for you guys. So income statement right here over the last 4 years, you can see let's see, revenue of $228 billion in 2017 with a 21% profit margin. Just insane numbers. 2018 you kick that up a little bit. 2019 you kick it up. Okay, so revenue dipped just slightly in 2019, but yeah, net income dipped a little bit too. But I mean, you're still talking about just godly numbers, right? And then 2020 it got even better from there. I mean, goodness, I mean, $274 billion in revenue with a 21% profit margin. These are just nutty numbers. I mean, usually you're talking about with a company of this magnitude, and really there is no other company out there that you can compare this to. Look over here, you got 2.4 trillion. That T is a $1 trillion market cap. There is no other company to compare this to in the tech sector. But when you're talking about big tech companies, you're either going to have massive revenue with little to no profit margin, or you're going to have a very high profit margin with very little revenue. You just don't get both typically in a company. There are very few companies out there that have high revenue and high profit margin, and when you have both of those things, you know you have a money-making machine of a company, and it's an easy investment, right? And those are the kind of companies that, I mean, they just shoot up in price for the stock market, in the stock market. What am I trying to say here? They're great investments, right? I mean, Facebook comes to mind. I won't get too far into Facebook because this is a video about Apple, but Facebook is another company that has insane revenue and very good profit margin as well. So let's get back over to the Apple chart, but that's just an example, right? So from a financial standpoint, a fundamental standpoint, a long-term hold standpoint, yeah, this company is fantastic. There's nothing to worry about here. From a chart pattern perspective, if you're a long-term holder, this is a breakout over the previous long-term, previous all-time high. So that's a very good look. The previous all-time high was back in January. It was, looks like it was in the let's see, $147 range. It looks like we have broken that now. We've gotten up to about $150, and right now we're kind of sitting in that $147 range. So kind of right back where that previous all-time high was. So we've broken the previous all-time high and then back down a little bit, but we've created this consolidation pattern right here. So previously, before this pattern, I've made a video on this. I don't know that I've made a video on Apple recently, but I've definitely made a few in the past because I was tracking this kind of consolidation pattern prior to this breakout, and I had this orange line right here because even though we had a kind of a fake out right here, there were several times where we reached this $138 range as a top, right? We topped out back in September of 2020. That was the all-time high at $138, right? And then we backed off, and it took a while to get back up there. Got back up there in December, broke through it, but then dropped right back under, so that was a fake out. And the next wave back in February did hit 138, maybe 137 briefly, back down, back up, maybe touched 136, 137, so it got close, and now we finally broke through it again, and we have reached all-time highs of 150, and we're currently at 147. So there was a few times that we hit 137, 138 as a top, and we've been consolidating since, and we've been creating higher lows since. You see this blue line right here indicates that every time we retrace from these highs, we retrace a little bit less, right? So we hit 138, we come down here all the way down to 103, right? And then we head up and we come down here to 106. So we're heading up on the lows, right? And then we come up here and we head back down, but we only retrace to 116, and then 118, and then 121 and 123, right? So the lows just keep coming up, right? So there we're talking about, you know, if you're a short-term investor, there's not, the amount that you're losing, the potential loss on your investment if you sold at the bottom is less, right? Every time it's a little bit less. So that's a really good look. Your floor keeps coming up. Very good look on a stock chart, right? Meanwhile, you've got this series of, man, we just cannot break 137, 138, and then boom, we broke through it right here, right? And that's where we're sitting up here. So very good look for Apple on a stock chart. We had this consolidation period after a huge run up from the low in March of 2020. You know, everybody knows what that low was from. And then we just had this crazy run up in tech stocks since then that peaked in September, consolidating since. And now we have our breakout. And this breakout has created a chart pattern right here. In this particular chart pattern, and I talk about bull flags and bull pennants on my channel a lot, but it is very rare that I see this kind of pennant or flag. This particular, I guess I'll call it a pennant because it's not, each side is not even. The top and bottom are not even, so it's not a flag, it's a pennant. But this kind of pennant is one of the best kinds because, and this is something that I read in a Market Wizards book, one of the most successful traders of all time, was interviewed by Jack Schwager in this book, and he explained he only trades patterns that have horizontal breakthroughs. Okay, so, and I'll explain why that is here in a moment, but I want to show you this pattern, and then I'll tell you why that horizontal breakthrough is so important for profits and losses over a long period of time if you're going to be trading a lot of stock chart patterns. Okay, so let me show you this this pattern, and I'll do kind of just a brush stroke real roughly first to kind of give you guys an idea. This is the pattern that we're looking at, right? So you got your flagpole right here, and then you have kind of like a pennant pattern. And I know that's a really rough drawing because I'm a terrible artist. But that's just kind of give you guys an idea. So now let's put some kind of real lines on here. Okay, so we've got our top right here, right? And that's not perfectly horizontal, but it's pretty close to horizontal, right? I mean, we're talking about basically $150. Actually, the all-time high is, if you look right here, the H right there means high. If we put our cursor over the top candlestick, you can see the high is exactly $150 to the penny on Apple. So it looks like the all-time high on Apple is $150 to the cent. So $150 is kind of our breakthrough range. We've got a slightly descending top trend line right there, but it's ever so slight. And then it looks like we're going to have a ascending bottom, right? So like I talked about back here, that is a very good look, right? Because every time this wave comes down, it's a little bit less. You're not losing money when it comes down, really. I mean, you are if you sell at the bottom, but just don't sell at the bottom, right? I mean, it's that easy, guys. Investing is so easy, right? You just buy at the bottom and sell at the top. That's what everybody says, you know? Well, it's easier said than done. But when the bottom is trending up, it does make it a little easier, right? So you've got this ascending bottom trend line. You've got this top trend line that is relatively flat. It's not perfectly flat. It's pretty close. But it's right there at that $150 range, maybe 149, something like that, right? So you've got this pennant. You've got this flagpole. Let's see. We'll take the top right here. We'll bring it all the way down to the bottom. There's your flagpole, and there is your pennant pattern. Okay, so I draw a lot of pennants on this channel. Draw a lot of flags, lots of head and shoulders, all kinds of patterns. But this pennant is important. Is better than a lot of other pennants because this top trend line is flat. It's horizontal, like I was saying earlier. And the reason why that is so significant is because when you have a chart or a chart pattern that breaks down, it doesn't go the way you want it to. You have a stop loss in place, or you're looking to sell because the pattern just broke down and it's just not working anymore. You're typically looking for it to break under a line, right? So if you have a line right here, if it breaks under it, you know, okay, this chart pattern has not worked the way I wanted it to. It's time to sell. You set your stop loss, or you are doing it manually and you sell out, right? When that line is horizontal, you're not losing as much money because you're not waiting for a stock to break under a line that is descending. Let me try to clarify that for you guys a little bit. Look, if this line looked like this and we broke out right here, let's say we buy at 150 and we're targeting the upside. So we bought in at $150 and it doesn't work out the way we want it to, and it just starts breaking down. If we wait until it breaks under this line, we might wait until all the way down to $145, right? So in this trade, we bought at 150 and sold at 145. We've lost $5 per share on this trade, right? $150 stock, that's what, 3% or something like that. You know, rough math, but that's a 3% loss on the trade, right? Not good. I mean, it's not terrible. I mean, if you're playing small cap, micro cap stocks, that's nothing. But on these huge companies, you are looking to minimize losses to barely anything at all, right? When you're trying to make these trades, ideally you want to win every single one, but let's be real, nobody wins 100% of their trades. So when you lose your trades, you want to minimize those losses as best as possible. So how do you do that? You find stocks, or you find chart patterns that you can stop out of before you incur significant losses. And how do you do that? You find horizontal breakthroughs. So you have this horizontal line right here, right? $150. That's the line in the sand. 149. 149, 150. It's pretty dang close. When we break through that, that is your entry point. If we break below it, right, because now that this line is horizontal, we know, hey, we're going to break through. If it comes back down and breaks through this blue line, that's at $149. We know that's where we sell, right? The trade has broken down. It's underneath this support line. It's broken down. It's no good anymore. We have lost $1 per share as opposed to $3 per share. It's far less of a loss, right? That is extremely significant. And you might be thinking like, it's $1 instead of $3. That's nothing. Well, it's not nothing, because when you do this every day over the long term, that adds up to a lot of money, especially if you are trading hundreds of shares or thousands of shares, right? And you might be thinking, no, well, I only trade a couple of shares. I'm a beginner. You have to start with strong fundamental trading rules, or else you're not going to make it when you do this stuff, right? If you're just winging it, you're going to lose money. Most traders lose money until you learn certain rules, right? Minimize your losses with stop losses, and minimize your losses with horizontal breaks, right? There are lots of ways to minimize your losses, and I recommend reading the Market Wizards books. The links are down in my description if you want to check them out. There's lots of other links down there if you guys want to check, how to use TradingView, all kinds of stuff, how to trade chart patterns, things like that. But one of the ones that I haven't really talked about much in my videos is these horizontal breaks. So that's what I wanted to kind of drive home here in this video is, this one it's rare because you don't see a horizontal break on a bull pennant very often. And this is on Apple. So, I mean, this is just a fantastic setup. It's such a great company. It's a horizontal break. No chart pattern is 100%, but I feel really good about Apple because it's such a great company. And if we break below this horizontal break, we're not going to lose a ton of money. We're going to lose 1% of our trade. I mean, it's not nothing, but it's a lot better than what it could be, right? All right, let me get off my soapbox. The rant is over. Let's find out what the price target is on this trade. Okay, so we've got this big old flagpole. I mean, it starts all the way down here at $123 and it comes all the way up to $150. That is a huge flagpole, so that's going to be our kind of extreme potential, I think, here, right? So 123, I think it's about 123. Let's see. Yep, 123 up to right there, 150 exactly. That gives us a $26.87 flagpole. So we add that to our breakout, and that is our target, right? So where do we think our new bull run is going to start? Let's say we hit here, bounce down here. Let's just ballpark it. You guys got to pay attention to this chart for yourself and know, where does this break out? I'm just going to pick a spot and go from there, but you really got to pay attention. And I'll update the video, when we have that breakout, if we get that breakout, to let you guys know. But let's assume we break out there. and we head up from there, it looks like we would potentially run up to $171 on Apple. I mean, that's pretty sweet money, right? Because we're sitting at 147 right now. If we bought in at 150, you wait to break through that blue line, right? Break through that blue line, buy in at 150, you run it up to 170. That's 17-18% on your money, right? I mean, that's pretty sweet money, guys. So that is on the biggest company in the world. I mean, we're not talking about making 17% on a super risky, small cap, no-name company. We're talking about making 17% on the largest company. I don't know that it's in the world, because I think Saudi Aramco is the largest in the world. I may be wrong. I may have old information. Apple may have kind of taken that crown from them because they've, run up lately. But they're at least a top 2 company in the world. I mean, if they're not the biggest, they're the second biggest, right? So you're talking about a company that is so solid that you could put your entire life savings in this company for the next 30 years and you're probably going to be fine. There's probably not a financial advisor out there that's going to tell you don't invest in Apple. I mean, it is as solid as it gets. So you're talking about making 17-18% on a short-term trade on a super solid, low-risk company. That's pretty massive, guys. Okay. There are ways, there are shorter term and lower price targets that we can hit here along the way. If you want to measure out the size of this consolidation period right here and play the upside of that, you can. It looks like a pretty small consolidation. It looks like we went from 141 up to 149, so maybe that's an $8 range, and you play that after the breakout. So maybe you go to 158 and then you take a little bit of profits off the table there, maybe for a, what is that, a 6% gain? That's okay, 6%, but I mean, this is such a good company. I feel like you'd be hard pressed to take your money out at that point, right? Because they're just so good. How do you take your money out after making 6% on Apple? You just got to hold it long term. So that's what I got, guys. The soapbox here in this video was the horizontal break is so important because you can really minimize your losses when you target trades like that, right? If you're only targeting trades that have that horizontal break, you can really minimize your losses, which means you are effectively maximizing profits, right? If you're minimizing losses, that is helping your profits over the long term. So you're just making more money over the long term. That's the big one here, guys. It's a 17-18% potential profit play on Apple if we get that break above $150. And that's what I got. I mean, it's just a great company. So hope you guys enjoyed it. If you did, let me know. Let me know down in the comments. Let me know by hitting that like button, and let me know if you're not a subscriber by hitting that subscribe button. That doesn't make any sense, but just do it anyway. I do stock chart pattern analysis on this channel. So if you liked what you saw in this video, you're going to see more of the same. I use TradingView to find stock chart patterns. I make videos on them. I show you guys, and I hope we're making money along the way, okay? So I'll see you guys in the next one.